It's rare to see long-term growth stories such as this one. And not only has this company been growing, but it's been growing in a massive way. The 10-year compounded growth for this stock is 10.13%. Not to mention the profitability over the last year represented a 15.23% free cash flow growth, and the net income is the same at about 13% compounded over the last decade. Now, this company has a long-term track record of growing, and we're going to talk about what Visa is doing that makes it so successful. We're going to talk about what they just reported in their most recent quarter. We're going to talk about the revenue split. We're going to look at the debit and credit card growth, now sitting at about 4 billion cards outstanding, and you can see that this company is hitting on all metrics. And not only is this company growing, but they're one of the most fiscally responsible companies you will ever find in the market. And then last but not least, we'll close out with valuation and where the company's trading at today. So if you want to overall broad look at Visa and say to yourself, is this a company I want to invest in? Well, this is a very quick overview of the company and a quick look as to whether or not this is a stock meant for you and one that you should own. If you haven't seen me before, my name is Jordan. I'm a millennial investor, and in every single YouTube video, I update you guys with my YouTube balance, which is disclosed here at the first of the month every single month, and my portfolio holdings, which stay tuned because you guys will likely be seeing a change soon in the very next video, so stay tuned. And then there's also the holdings that I have and my portfolio balance as of the time of me filming, and my performance since joining this brokerage, which M1 Finance has my holdings right here, which if you want to check this out down below in the description, which includes Visa, like we're talking about today, this is down below right here, and you can get signed up with M1 Finance, which gives you a free $10, and you would help support the channel, and 127 people have done so far. So thank you guys for tuning in. Thank you for subscribing, since I'm assuming you found this video extremely helpful and lots of insight. And without further ado, let's go ahead and dive into Visa. Now, if we hop over to the research tab here on M1 Finance and we type in ticker symbol V for Visa, and you look at this company, you can see over the last 5 years it's had pretty good performance, returning about 70%, not including dividends, to shareholders. Now, if you look over the last year, that's when things start to get pretty ugly. Over the last year, this company's down 20%, and year to date, it's down about 16%. While that may not sound like a big downturn compared to many other companies in the market, it's extremely rare to see one such as Visa go down this much, because normally this is not a volatile stock at all. Now, the good part is that when you look at this company, you can see that it is still growing. Net revenues of $7.3 billion reported an increase of 19% year over year. What's even more impressive is that this 19% growth came at a time when the dollar was getting stronger, which is not good for foreign revenues, which means that this company would have grown 21% on a constant dollar basis. Now, Visa gets a large portion of its revenues from overseas, whether it's European countries or China. A lot of countries outside of the US use Visa on a day-to-day basis, and when the dollar rises, it's not good for this company's revenue and profits. So even despite those headwinds, the company still grew 19%, which you can see right here, which is looking very good quarter over quarter. We're going to hit record numbers here in 2022. Now, furthermore, you can see how this revenues are split up. Now, international transaction revenues makes up about half of this company's revenue, like we spoke about half of them just coming overseas. So it's very easy to think of this company being a US dominant company. And don't get me wrong, a lot of it comes from the US, a lot of it comes from overseas too. And you can see how this is split up between service revenues, data processing revenues, transaction, other, and then client incentives. You also can take a look at this, the credit card and debit card growth. You can see that not only is each transaction growing, so it's easy to look at this and just think, okay, consumers are spending more. It's likely that Visa is going to make more money as inflation goes up, as consumers spend more on their debit and credit cards, but the actual cards themselves are growing. The number of debit and credit cards they had outstanding grew about 8% year over year, from 3.64 billion up to 3.92 billion, now reaching almost 4 billion cards spread out all throughout the globe. And then here are some operational performance metrics in terms of its monthly growth for both its total, credit, and debit, showing how we've come off of the highs of stimulus and how we're starting to flatten out and mitigate those insanely high returns that we saw in 2020 and 2021 here going into 2022. Now, if you go over here and we look at the free cash flow and the cash return to shareholders, this is the thing that gets me most excited and leads me to why I think that this company trades at such a high valuation, which we'll be going over in just a second. If you look over here and we hop over to Qualtrim Insights right here and we zoom in, let's go ahead and get this zoomed in. This is the return on capital employed. You see that it's pretty decent at around 8 to 6% over the last last couple of quarters. And if you look at this company's profit margin, even with it going down in 2022, this company has profit margins that float in the mid to low 50s. This company has incredible margins. Its operating margin is even higher than that, typically around 60 to 70%. This is one of the most efficient businesses that you'll find on the planet. Let me give you an example. One of the most popular companies and the second largest in the world, which is one of the most efficient, is Microsoft. While despite being as high as you might think, their profit margins only sit as of the most recent quarter at around 30 to 35%. Now, 35% margins are pretty good, but that's nothing in comparison to Visa's 50% plus margins, which are pretty much unheard of a company of this scale at hundreds of billions of dollars in market cap. And so that leads me to what are they doing with that money? This company can generate lots of cash. And if you hop over here and we look at the free cash flow, we've been looking at the revenue and seeing that the company's growing its top line, but what the real thing that matters is the profits. What is the company actually producing in free cash flow that can be used for shareholders? Well, you see that the peak was about mid-2021, coming in at $4.2 billion, until this most recent quarter, coming in at a massive $5 billion in free cash flow per quarter. And if you look all the way back when this chart goes to where it started at in 2006 on that second quarter at $0.2 billion, you can see how over time we've generally trended up. Other than a couple hiccup quarters like this with write-offs, you can see that generally speaking, over time, this trend is in the upward level. And this becomes more apparent when you look at this on an annual basis, because sometimes companies have odd quarters or little hiccups in their timelines, but you can see going back to 2005 when this started, over time, the free cash flow looks ridiculous. And with 2021 coming in at $14.5 billion, based on where we're at today, the 2022 numbers should look even better, which is really exciting for shareholders. And this can be seen in the way that they're returning capital through the form of share repurchases and dividends. In the third quarter, they returned over $3 billion in free cash flow in the form of share repurchases and dividends, and throughout the whole year, they've done about $12 billion or so just in the calendar year, and that doesn't even factor the last third quarter, and that doesn't even factor the last fourth quarter that hadn't even hit the income statement yet for the calendar year 2022. This is what has led this company to have massive dividend increases, going back to 2009 when they paid 3 pennies to today's 38 cents. They've about 12x their dividend in the last 10 years or so. And if you look at the shares outstanding on a quarterly basis, it continues to fall from a previous 2.25 billion. It goes down and down and down every single quarter, now sitting under 1.9 billion shares outstanding, which is impressive when you're looking at a company of this size, currently about $400 billion buying back that much of their own stock. Now, last but not least, the only thing I want to talk about is this company's share price and its valuation. You look at the company stock, it currently trades at about 180, and the previous high, going back to mid-2021, was around $250 or so a share. Now, the long-term average of this company, in terms of its forward price to earnings, is normally at around a 30 to 35. You see the trailing average is about a 35 on a 5-year average, and then the forward 5-year average PE ratio sits at about a 32. Now, right now for both of these metrics, we sit at around a 25, which is a 24 to 28% discount from where we normally sit at in terms of this company valuation. So I think it is very likely that Visa could see an uproar in share price over time. And while this is a large company, and it is a very boring stock using credit and debit cards that people typically overlook, when you tend to ignore a lot of the things that make Visa great, like these incredible ratios that people typically tend to forget because they're too focused on lots of other extraneous factors, when you look at how incredible this company really operates in, it has one of the best financial metrics and long-term growth stories in the market. This is why in my dividend growth portfolio, out of these 20 holdings, why it's continued to remain one of the largest positions in the portfolio, despite it having good and bad times and a low dividend yield, because I think the dividend growth and the share buybacks that this company has will return capital to shareholders faster and grow faster than many of the other slow-growing dividend growth companies in the market. So that's why I have it in the portfolio. This is what I like about it. And if you like this video and you found it helpful, subscribe if you haven't already, and check out all the stuff down below in the description, including M1 Finance to get you $10 for signing up. But other than that, guys, thank you so much for watching, and I'll catch you guys next time.